Hi, let's continue to another advanced performance management topic, which is economic value added. It will be covered in session A if it is examined. From the syllabus itself, uh, part A and part B will form session A question. So, economic value added is from part A, okay, under the financial measurement. This is one of the uh, methods or metric that a company can use to assess whether uh, their what they are doing generates value for the shareholders. So I just want to highlight uh, and makes this topic as simple as I can, so that you can get the ideas very fast and apply accordingly in your exam if this economic value added coming out in the exam. Okay, keywords. NOPAT. So operating profit. If let's say the questions start from the operating profit. So very important, you need to take note. Tax pay you must minus from the operating profit as well as the tax benefit of interest. All right, so means that what is the interest expenses and what is the tax rate. So you need to multiply that figure in order to minus out the tax benefit of interest. I this turns economic value is very uh, important in this EVA, economic value added measurements. All right, economic value here means that add expenses with long-term benefit, which means whatever the expenses that can generate long-term benefit to the company, that expenses you need to add that to the operating profit, so that the adjustment made for the purpose to show to the main company to the directors that how these expenses generate value for the company. So that's the reason the expenses need to add back. Add accounting depreciations minus economic depreciations. Okay, so that is the rule how it works. Capital employed and profits. Remember to add provisions and also non-cash. If let's say there are any provisions uh selected in the questions, right? Then you need to add the provision back to the profit, operating profit, because it is considered very prudent, because accounting is based on the prudent accounting basis. Then while this EVA based on the economic value basis. So that's why provision need to add back. At the same time, need to add back to the capital employed section. Later on, we have one question to give you an overview how this adjustment works, right? And of course, there are the last one is the WACC, weighted average cost of capital. So company will utilize equity and also debt uh, to operate their business, right? So this is the formula: percentage multiplied by the equity rate plus percentage times the debt rate. You see here, 1 minus tax rate. So must be based on the after tax rate. So this is how you need to adjust for the WACC. Then you finally you can calculate what is the EVA figure. Net operating profit after tax minus WACC multiplied by capital employed. So let's see for the example. So this example is from the December 2019 amended. Arkaig. This company, you can access the questions for the BPP Practice Act as a kit. BPP Practice Act as a kit, is available online. You can buy actually from the BPP media website, right? And then because my version is for the September 2025 to June 2026 version, so it is located at the question 53. So let's say the new version, if let's say this question the number may be different, but you look for the name ARKA IG, the company name. So you're able to get to that questions. So it is from the December 2019 examination. Right. So now let's look at the illustrative calculation. So when what the director wants from you, okay, as a consultant, right? Because they have the concern regarding whether to replace the ROCE with this economic value added metric, right? So they want the illustrative calculation, right? This one is under the embedded requirement. And what is the benefit of this new measurement, which is EVA, to remove ROCE? If let's say they consider this EVA. Let's look at the illustrative calculation. You see here, the operating profit in the question. So you need to make the adjustment. What adjustment you need? Eight amortization. Whatever the amortization, depreciation, you need to add back. Marketing expenses need to add back. Our research and development expenses need to add back, because marketing and R&D, they are bringing long-term value to the company. So that's why these expenses need to add back, right? We cannot be uh, careful that accounting depreciation and economic depreciation is totally different thing. Accounting depreciation is based on what the accounting rule, all right? Like the property, plant, and equipment apply what certain rate in as per the IFRS, right? Uh, Property, plant, and equipment. Then this one is based on the accounting uh, basis. But economic basis is the economic depreciation is based on the economic view. Okay, the total value of the assets maybe more than the how we value the assets at the initial. So maybe like the marketing and R&D, all this add out the economic value of the assets. It is different from the what the of accounting basis. So that is why you need to take note why we need to add that the accounting depreciation, and then we need to less the economic depreciation due to this reason. So all this figure actually is in the scenario. So you need to pick out the figure and then do the adjustment. Okay. Less test expenses in the question is stated 694 million, right? Then here we have another thing to take note: tax benefit or interest. Inside the questions, the interest expenses is 213. So you need to time with 25% tax rate so that you can get 53 million to be deducted from the operating profit. And then need to less economic depreciation. This one is provided in the question 1907. With all these adjustments, you will come to the another part is the capital employed. This one I just put this into this example so that you can see the clear picture, because you see here, eight marketing expenses is at the top, right? 90 million. Then here, we add marketing. This one, 900 million, how to get it, right? This one is actually, they spend 90 million of for 10 years each year equally. Then it is to build the brand of the company. So that's why 900 million add back to the capital employed. Okay, and then less marketing written down. Okay, in their based on the economic depreciations calculation, it is noted that, all right, they have 10 million, right, to be incurred. That means there is a written down of the expenses, right, from the marketing, the total marketing cost, which is 10 million uh, across 10 years. So it will, when you get the figure, you will get 100 million. This one need to be minus out. Similarly with the based on the accounting view, which is assets also can get I mean written down value. Let's say based on the uh, informations, then what figure to write off. So this one is similarly applying to the economy uh, value perspective. So at the total marketing expenses, 90 million times 10 years, 900 million, less whatever the written down value, right? 100 million. So that you will get the adjusted capital employed. Then you can put into the formula of this EVA, which is NOPAT after the adjustment of the whatever add and less the above two line, and then less and then minus with the percentage of the WSCC, right, times with the capital employed here, then you will get this 1.32 billion uh, uh, dollar, right? Which is in positive. So what is the benefit actually? This EVA to the company is that when it shows positive value, which is means they bring long-term value to the company, and it shows that it with this EVA it can help the company to maximize the shareholder value because management will make decisions based on the economic uh, value. Can you see that? Because like the marketing expenses can add that can it's not expense off. So actually you won't like the ROCE, okay, the value of the assets become lesser, right? If they say spend more. So if our ROCE, maybe management will try to control the expenses because they're scared of the decrease of the value of the assets. So it will have an impact on the ROCE calculation. And then it will encourage more investment. So that is how you assess the questions and apply this knowledge, the concept itself to the examination based on this um, some highlight. Okay? And then you can refer to question. Actually, all for the EVA questions, I noticed that actually the questions, although it looks very complicated, but you have the right mindset of what actually EVA, why we need to add that the marketing expense thing, we need to do the adjustment for the depreciation for the economy, all this, you have the clear understanding that whatever the scenario given to you, you're able to put in the figure accordingly to make the adjustment. And remember, with all these single adjustment, it will carry mark, right? So it will eventually help you to get mark. And then not to ignore the analysis on the like what the second requirement benefit as a new performance measure. So you get the figure, although maybe some part of your calculation wrong, but the flow of your calculation, you follow the EVA calculation, then you still can get some marks for you working. So make sure you show your working clearly, right? Then you whatever figure, like let's say your EVA figure is not 1.32, but is another figure, but it's also positive. That will give you mark as well because you apply the EVA formula in a right direction. Okay, although some adjustment you did not put. All right, you did it wrong. Okay, then give the your analysis, your justification, or whether the board of directors should consider this new measure new measurement EVA to replace ROCE. Hope this that means simple explanation and of the application of the EVA can help you in your examination. Whether for the September this year 2026 or come out to the next year June 2027 for this part, right? Which is covered in the section A question. And to before I end my presentation, I just want to highlight that I already have the that is revision book title Passing ACCA APM VEC Tips Independent Revision Book 2026-2027 while by Kindle, Amazon Kindle platform. And of course, also I also consider Kobo, Kobo platform as well. I already sent for the publication as per today date, which is 17th of August, right? Already in the process. So because I noticed that one of my friend from Malaysia, so he could not buy from the Amazon Kindle site because of the area restriction. So Kobo will be another option for those who cannot buy from the Kindle site. So hope and I'll include the link, all right, in the description and as well as in the comment. Let's say later on successfully the Kobo publish my book online, so I will amend the description and comment as well. Thank you for your time. Have a nice day. Bye.